Scott Berman joining me now is the president and co-founder of the Panther Group. Scott, there you are. Thanks for joining us today at the Cannabis Capital Conference. Welcome.
Yeah, thank you for having me. Appreciate it.
Let's just start high level, and then I'll get to the real questions. But tell us about the Panther Group. Tell us what you guys do, and we'll go from there.
Sure. So we're a venture capital consulting group. We've been around the cannabis space since 2014. Collectively, we've invested in 35 companies across 22 different sectors. We've looked at about 600 different deals. So we take a strategic role and we do a lot of homework on the space. We serve on the board of a lot of these companies and really try and help them grow to the next level. So we work with very early stage companies, and as they get to the next level, we help them with additional funding. We help them with consulting and advising, and then advertising solutions.
All right, so you do a lot of homework on this space. Let's talk about the space if we can for a second here. What are the biggest drivers economically of cannabis right now? I'm thinking maybe 1 year, 2 years, 3 years down the line.
Yeah, so with me, it's always going to start with politics. And that's how I originally got into this space. And I think that the facts on the ground really will dictate the economic landscape in many places. So first you have the statewide rules. And, take an example of New Jersey and New York, where they've recently passed the adult use bills. Now we have about 2 to 3 years of regulations that will be coming down, and that will greatly affect the economic landscape of those markets. Then you also have markets like Oklahoma and Michigan and Illinois, which are growing very rapidly because of the regulatory framework. So I think it starts with politics, and that's going to be the story for many years to come.
And you mostly, you're on the venture side, and I myself am just much more knowledgeable on the public company side. So I'm just curious, on the venture side of the market, what are the companies that are out there? Is it the same as the companies that are public, that are on that trade on exchanges in the U.S. and Canada, or are there different kinds of companies out there on the venture side that I'm not aware of?
Yeah, I think there's different kinds of companies, and I think mostly because they're earlier stage, okay, and they're trying to gain market share and build revenues so that they can go public. And so there's a lot of people trying to get into each vertical. So there's point of sale companies, and there's lab testing companies, and there's vertically integrated organizations in every state. And right now there's a big push for market share. So a lot of these companies are not yet at the point where they can generate the revenues that they need to go public. And so they're in major growth and expansion mode.
But like in terms of, like you mentioned the different verticals, like what verticals do you mean?
Well, so they're all over the place. So there's certainly a lot of ancillary businesses. There's software, data, advertising, lab testing, construction. And then there's the plant touching side, where you have cultivation facilities, brands, processors, dispensaries, and people that are actually producing goods. So you have a lot of different factors in. You also have law firms and accountants and business consultants and recruiters that are coming in as well. And so there's businesses that are cropping up for cannabis along all those sectors as well.
I'm just curious, of all those different verticals, are there some that are, I don't want to say more mature, because obviously this whole space is not very mature, but are there some that are more developed than others? Because I would imagine, a legal cannabis, agency, for example, is relatively more, I guess, has more of infrastructure than like a, I don't know, than some greenhouse or whatever. But like, are some verticals more developed than others? I would imagine they are.
Definitely, yeah. I think cultivation has actually developed quite a bit in the last few years, and there's a lot of science and there's a lot of experience. I mean, a lot of folks have been growing for many years, and so there's more and better equipment. So there's more funding. So these facilities are more efficient, and they're producing better cannabis at a better price. And so I think there's been a lot of evolution in actually making product. There's also a lot in terms of the form factors. So the processes that are distilling into oils and topicals and edibles and things like that. So I think the product mix has really accelerated a lot over the last few years. I would say that there's certain sectors that are definitely behind. One is advertising. I don't think the advertising solutions there's a lot more than there used to be, but there's not a lot of companies spending real money on advertising yet. And we think that's going to change. We also think lab testing is underserved in many states. So frequently a state opens up and it gets really, really busy and the labs get overwhelmed. And so there needs to be more lab capacity. So that's one of the areas we think has more growth ahead of it.
Interesting. I would imagine the advertising is more of a function of the regulatory landscape. Would you agree with that, or lack of clarity on that front?
I would say that's a big part of it. Most small businesses use Google and Facebook for 70% of their advertising, and they're not able to. So I think it's part of it, but it's also just, the immaturity, if I may, of these businesses. And they also are, the funding around marketing. Usually it's something that's not heavily invested in the first few years of a startup. And so we try and push companies to really step up their marketing and get ahead of their competition early.
So let's talk about the Panther Group and who you guys invest in. What do you look for in a company? What characteristics does a company have to pique your interest, and what is your philosophy when it comes to just how you deploy capital?
So I want to start with the team. We really like to look at the management. Who are the founders and who are their people that work with them every day? What have they done in their past success? And what is their general view of the future of the cannabis space? So there's a lot of really smart people. It's very exciting actually to work with these folks every day because they're super smart and been successful in other verticals. And so what we look for is, can this person and this team succeed in the cannabis world where they've succeeded before? So that's a big part of it. The second part is really a well thought out plan and a pitch deck that makes sense and is optimistic but realistic. So, everyone wants to make $10 million in year two, but it's not feasible many times. So we like to look for sensible projections. We definitely dig through the numbers very carefully. And we like to see a plan for market share, basically. So, my big question when I look at a lot of these companies is, how many customers, you want to reach a certain level for sales and revenue at the end of the year. How many customers do you need? How are you going about getting new customers and gaining market share on competitors? So that's a big factor. Everyone thinks that they have this really awesome idea, and a lot of them are, but there's a lot of other people that have that idea too. So what's going to set you apart and differentiate your plan from someone else?
I'm glad you mentioned pitch decks, because when I first started looking at those a few years ago, I thought, wow, these are really good. They're really convincing. So, what are some red flags? Obviously, they weren't all good. Well, what are some red flags in a pitch deck, maybe aside from what you would call outrageous projections?
Yes, so I think that some of the red flags are too many slides that talk about the cannabis space in general, and not enough that talk about your specific plant. So I think at this point, most of us that invest in cannabis know that it's big. We don't need convincing. So if you show me charts and graphs on the size of the market, I already know most of that. What I really want to see is how you are going to be a major player and either win your category or be in the top 5 in the players in that particular vertical. So I like to see a red flag is not looking at the competition. So I always like to see a comp slide. Who are other businesses in your vertical and what are they valued at? And back to your earlier question, what we look for is a valuation that makes sense based on the projections and also on the market forces and the comparisons.
Yeah. So let's pivot to talk about the other side of your business for a second here. You mentioned in addition to being a venture capital firm, you also are a digital advertising firm. Facebook and Google accounting for the majority of digital ads, and the fact that they're not in this market is probably opened an opportunity for a firm like yours. Why are you also in this business, and tell us a little bit about like the layout of the digital advertising, the landscape,
Yeah.
in cannabis, and if it's how it's different than like the regular digital advertising landscape.
Yeah. So first of all, part of it is because of my background. I've been in digital for about 15 years. And when I first got into the cannabis world, I really wanted to bring digital advertising to the space, but it was a little bit early, which was about 2014 and 15. But nowadays it's a lot more relevant and there's a lot more competition. So part of it is, there's about 3,300 brands in California alone, and they're now slotting fees for retailers. And there's a lot of, there's dozens of vape companies and edibles, et cetera. So in order to really gain customers and drive online sales, you need to get more sophisticated with digital marketing. And so our approach is based on data, always a data-driven approach, and really understanding the customers that are currently shopping for your products, whether you're a dispensary or a brand, but also where, are they buying online? Are they coming in store? And what type of cannabis are they purchasing? So really honing in. One of the big changes that we've had in the last few years is the amount of data, customer data, that's available for programmatic advertising. And this is completely outside of Google and Facebook.
Just for the uninitiated, just explain what programmatic is for people that don't know.
Sure. Programmatic advertising is basically using data-driven techniques, using audiences, cookies, device IDs, cable boxes to drive very specific ads to a specific audience. And it could be zip code targeted and audience targeted. And so what we're doing is we're bringing in third-party data of people that consume vape or edibles or flower, and they live in these following zip codes that are surrounding a certain amount of dispensaries. And so we then target device IDs and websites that are in that area so that we can drive relevant traffic and save cost. So with digital, it's all about analytics and really driving down the acquisition cost. And that's what programmatic can do very effectively.
But I'm wondering, because cannabis, at the end of the day, most cannabis products are consumer packaged goods, and people need to feel them and taste them and see them. I'm just wondering how that translates to digital advertising in an industry that most people, I think it's a fair assumption to say, most people aren't super informed, right?
Right.
Most consumers.
It's a great point, Spencer, because first of all, we definitely need more education and people. And part of the idea of audience targeting is serving a specific ad based on what we think that audience would like. So personalizing the advertising for, the right individual. So I think that's really important that we focus on. But in general, it's really a good idea, though, to broadcast and build brand awareness through digital, too. So getting your name out there in the market and really covering a lot of eyeballs. We're all about audiences, and they're in different places. So, and to your point about touching and feeling the stuff, I think that things have changed. The pandemic forced many retailers and brands to step up their game with digital. And a lot more cannabis is now purchased online and picked up in store or curbside. We do see it shifting back a little bit more to brick and mortar, but the general trend is ordering online is here to stay. And I think what we also see is once you're a regular customer, it's pretty easy to order online. You need to go and in new markets, you're going to have a ramp up period. But, once you get regular purchase behavior, it kind of gets easier with digital.
You mentioned how the market is so segmented. What's going to happen when those lines start to blur, when we get federal legalization and all of a sudden, what the brands that are big in California maybe can also be big on the East Coast as well. I mean, every state is sort of its own world right now, but that's probably going to change at some point, right? And then what's going to happen to the digital advertising market when that happens? Because it's going to be weird.
It's going to be weird and cool, man. It's going to be great. It's going to be great because now you have brands. I mean, right now you're seeing a lot of brands trying to move to another state with a partnership.
Yeah.
You've seen Cookies has done an excellent job of this, right?
I see billboards by my house.
Yeah. So they're doing a great job. And you are going to see then, obviously, all the brands are going to want to sell in the Northeast, in New York especially. And you're also going to see a huge ramp up in advertising around that. So if you're a West Coast brand that's done really well in LA and you want to sell in New York, I mean, what would you do if you were a liquor brand? You would buy a banner ad or a billboard in Times Square, right? And so I believe we're going to start to see the brand expansion across the country. It's definitely, federal legalization will take more time, but I think many of the brands are going to plan ahead of that and try and grow into new markets.
And we've got a couple minutes left before we wrap. I just want to ask you more, if we can go back to the venture side for a second here. How do you source deals? How do you find the right investors, or how do you find the right companies? I should say. I mean, how do you make that connection? Because I think a lot of people want to be venture investors and maybe don't have the access.
I think it's a combination of art and science. First of all, you got to do your homework and look at these deals up and down and look at them, around the sector and what they mean in the broad scheme of things. But I think, the second part is finding the right fit of the right strategic investor or the right group of investors for a particular deal. So one thing at Panther Group, we really like to put SPVs together and build 4 or 5 different folks that come onto the cap table that are really not just bringing funding in, but can strategically help that company get to that next level and an eventual exit. So really understanding, the people involved and getting the right investors in, and also just want to add the right type of investment. So this is something, really important, is what type of money are you taking in? Is it debt? Is it equity? What are the rates and the terms? Are there warrants and things like that? Right. So I think the particulars of the deal and then how this will position the company for growth going forward is really important in the early going.
And then before we go, I want to get your thoughts from your point of view, deal flow activity. We've seen a couple of major big deals on the public side in the past couple of months, Tilray, GW Pharma. Has that picked up? And from your point of view, what does that look like right now?
Definitely picked up. It's exciting, the M&A opportunities. There's a lot of new money coming into the space, which will fund these mergers. We're working on a large deal with acquisition financing involved, where they're raising money to buy up other properties. And so we do see that happening. We also see, though, strategically, companies trying to move into new markets. And so doing an M&A transaction is a great way to get a footprint into a new territory. And we've seen this with the MSOs, too, that have gobbled up vertically integrated operations the last couple of months. And so with the new capital coming in, I also think ahead of back to politics again, ahead of the political change that we're all hoping for, meaning 280E and the banking bill and the MORE Act, those things will drastically alter the landscape for the cannabis businesses. So getting ahead of that and merging and creating these bigger entities, I believe that's part of their strategy. Some of these bigger deals is to get ahead of the regulations that are coming.
Do you sense a collective sigh of relief? Deal flow is back on the upswing again? Because there was a minute there where it was a serious contraction.
I do. I feel a sigh of relief for many reasons.
Yeah.
We're all coming out of this pandemic, and the cannabis business is strong and thriving, and we're fortunate that many of our companies are still going strong, and so we do see that a lot of things are changing. There's a lot of tailwinds, and it's really going to be an exciting year.
I see Elliot, which means I think we're at time. Is that what that means, Elliot?
That is what that means.
Right.
Great interview, though, Scott. Really insightful. Spencer, thank you for leading it, man.
Thanks a lot. Thanks a lot, Scott.
I appreciate you guys at Benzinga, by the way.
Yeah.
You do a great job, and I enjoy all these events. So thanks for having me.